Here in this video, we are going to get into a Tesla price prediction for this week, where I think Tesla stock is going. Now, we have a lot of major events, including the Cybertruck delivery event. We have some earnings, we have economic data coming out. We're going to break down all of those briefly and give you a summary of what I expect for this week. Now, we're also going to look at some of your data for the broader markets because that's also important in determining where Tesla stock is going to go. And what I think is very important, the option activity for Tesla stock. Where are hedge funds and institutions betting that Tesla goes? I think that's pretty insightful. We'll share that here in this video. Hit the like button. Subscribe to the channel if you guys want to share this video with as many people as possible. If not, then don't. Let's go ahead and get into it. First things first, on Friday, it was a weird day because bonds were not really open. It was a half day of trading. So last week really ended on like Wednesday. But Tesla on Friday was in the green by about 0.5%, was up about 11 basis points as well in after hours. All in all, for the NASDAQ on Friday, you were down almost 0.25%. So Tesla did very well relative to the broader markets. That was great news. Now, where we go from here, it's going to get a little bit interesting because we have the Cybertruck delivery event on Thursday, but we also have what I have dubbed the great shift of capital that is happening at the same time as all of these other events and earnings and data and the Cybertruck delivery event. Hedge funds and institutions right now are looking at 2024 and saying, hey, where should we put our money? What is going to do well? Tesla is arguably going to be the best place to put your money in 2024. It's going to benefit the most from rates going down, especially if we do have a soft landing. That's a fact. Now, small and mid-cap stocks, your high-quality small and mid-cap stocks, should also do well. So I think this is something that is kind of rolling in the background where more capital is going to continue to get deployed in these interest rate sensitive sectors that will benefit in 2024. And it's going to take a while, but as we get closer to the end of this year, I think that's going to really start to pick up. And really even now, this week, you could see a lot more capital getting deployed since you are now in the holiday season. And it seems like the Santa Claus rally tends to start like after Thanksgiving, no longer after Christmas. So that's an interesting one. We'll see. We could get a lot more capital deployed this week, or we could get none. So that could make the week potentially a lot more bullish or just not as bullish. But overall, I think that is a longer term catalyst, a multi-month catalyst that is going to positively affect Tesla stock. Let's take a look at the option activity. So what we seen on Friday was 364 orders totaling $1.28 billion with a positive order value of 67%. So it was pretty positive for option activity on Friday. What you seen for volume on Friday was pretty equivalent for retail investors as hedge funds and institutions. This positive order value right here, this $1.28 billion number that I just rattled off to you guys, is hedge funds and institutions. That's not retail investors. So I usually like to see this positive order value match to the call side or to the put side on a bearish day to show that retail and hedge funds are in alignment. So hedge funds were 67% positive. Retail was 66.11% positive. That's pretty good. Seems like about everyone was basically on the same page on Friday with Tesla stock. So volume of 66.11% on the call side, volume on the put side of 33.89%. That was a puts call ratio of volume of 0.51. That means there was 2 times as many calls being bought last week compared to puts. And this is for the December 1st expiration. That is going to be this Friday. For the open interest on the call side, 57.73% of the open interest is calls and 42.27% of the open interest is puts. If we take a look at the bubble chart where this actual positioning is, a couple noticeable puts that do have a lot of activity. The $200 put has about 18,000 for open interest. The 230 put has about 14,000 for open interest, but the calls are definitely the big ones here. So at the 235 call, you have 9,200 for open interest. At the 240 call, you have 16,000 for open interest. At the 260 call, you have 23,000 for open interest. 250 call, you have 28,000 for open interest. And at the 245 call, you have 38,000 for open interest. So on the put side, 18,000 was the highest. Now, you're way higher than that on most of these calls. So if I'm just abstractly looking at hedge funds and institutions, this option activity in this bubble chart, where does it suggest Tesla's going to go? Well, anywhere between 240 and 260. If you factor in the break evens to these contracts, you could be looking around 265. Now, this is Trading Economics, the trading calendar. It has all of your global events, and especially the ones that are important are going to be highlighted in red. Now, Monday and Tuesday, you don't have any highlighted events besides Germany's consumer confidence. That's not going to move our markets. It's not going to be important. But you do have a lot of secondary data points, some data points that could be important, like Dallas Fed Manufacturing Index at 10:30 a.m. on Monday, and some bond auctions as well, some Fed speakers. That's going to be important. Now, Tuesday's a little bit bigger of a day for data. You have S&P Case-Shiller Home Price Index, House Price Index, year-over-year, month-over-month, Fed Goolsbee, CB Consumer Confidence, Richmond Fed Manufacturing, Richmond Fed Services, Dallas Fed Services, Dallas Fed Service Revenue, Fed Bowman, 7-year bond auction, Fed Bar twice that day. So there is quite a few different events happening on Tuesday, but your big events actually start on Wednesday, and that's when you're going to get the GDP growth rate quarter over quarter. Second estimate for Q3, you're expecting 5%. The previous number was 2.1%. So you're expecting a big revision there. Let me tell you right now, I don't know if we're still in a marketplace where bad news is good news or good news is bad news. But at some point, bad news will turn into bad news. Bad economic data will turn into bad news for stocks, as it looks like we're heading into a recession. Eventually that will happen. I don't know if that's right now. So I don't know if GDP rising from 2.1% to 5% is going to be seen as bad news, potentially. So maybe, it's hard to say. The trend would tell you, yeah, that would be bad news. So maybe we do get some bad news on Wednesday. For Tesla specifically, the big catalyst is on Thursday, and that is obviously your Cybertruck delivery event, and we'll talk about that as well here in this video. Now, on Thursday, you are going to get some big data coming out. You're going to get core PC price index month over month, personal spending month over month, initial jobless claims, PC price index month over month, and PC price index year over year. Now, you're expecting basically Goldilocks data across the board. You're expecting fantastic data like PCE falling dramatically, PC price index month over month expected at 0.1%, year over year expected at 3.1%, down from 0.4% last month and 3.4% last month's year over year number. You're expecting some really, really good data here. I expect this will be positive for markets. So Thursday, I'm a little bit more encouraged, a little bit more excited. Personal spending is a little bit of a wild card. Personal income, that should be good. And core PCE, again, a little bit of a wild card there as well. Then, like I said, on Thursday, we're going to have the Cybertruck delivery event for Tesla, and that's going to be our big catalyst for this week. And then on Friday, as we're kind of reacting to everything, all the new information we got from that event, you're going to get the ISM manufacturing PMI that comes out at 10 o'clock in the morning. And then Fed Powell, that speaks at 11 o'clock in the morning. And Powell's either going to continue to confirm this market rally, or he's going to say, yeah, we're not going to be cutting rates anytime soon. He's going to push back on what the markets have priced in. Now, I personally think the data this week's probably going to give the markets a positive reaction. I think Fed Jerome Powell is okay with where stocks are at. As you can see, if you look at the NASDAQ, pull this up to the daily, you've rallied a lot, but the last couple of days have been more of a consolidation effect, which you can expect that. I think overall, the markets themselves are probably going to go higher here. At some point, though, your big tech stocks, your mega cap names, are not going to just continue to go higher. At some point, markets are going to say, hey, those guys are not going to benefit from rates going lower. Maybe they shouldn't be valued as highly as they are. Maybe their growth is not as valuable if we have a soft landing and rates go lower. So I think you will start to see a broadening out of this market. You have recently seen a broadening out of this market, but big tech has still done well. But long story short, it wouldn't surprise me if your interest rate sensitive names start to get the capital inflows and some of your big tech sees outflows. Big tech is your market weighting of the index. So your indexes could trade sideways or even slightly down, and the vast majority of the markets go higher, and the indexes like the QQQ or the SPY could still be going down as most of your market is rallying. That I expect will happen at some point, probably not this week, but you are seeing that topping out effect. Now you are in a long-term cup and handle formation as well, which normally can send you to all-time highs. So it's kind of what I'm expecting. Don't be surprised if we do get a continued rally this week. Investors are still very bearish on our markets. This, contrarily, is a pretty bullish indicator. When everyone's bearish, you don't tend to get a crash. When everyone's bullish, you don't tend to get a rally, right? S&P SPY, the ETF, is 65% bearish positioned, 35% bullish positioned. The Dow is 75% bearish positioned and 25% bullish positioned. And this is basically across the board, across all of your major indexes for the most part. There's a lot of bears out there. People don't want to believe this rally. What's different about this rally is the economy is holding up. Bond yields have started to fall, but inflation is falling. So you're literally seeing your soft landing narrative playing out. Now the markets are pricing in about 1% of rate cuts for 2024. That is fundamentally different than what we've seen over the past 2 years. I didn't like the summer rally. I didn't think AI was enough to cause stocks to rally the way that they did. I am much more comfortable with this rally than I was even the summer rally when everyone was bullish. So I think you have a lot of people that are bearish that need to start turning bullish. And once everyone turns bullish, that's when you really want to be watching for a potential pullback in our markets. But I don't think it's right now. And especially for a stock like a Tesla, I mean, Tesla's still down over 40% from all-time highs. I think that stock could run big time. We do also have some earnings this week. Take a screenshot of this, pause the video, take a look. I have a personal trade on CrowdStrike. I sent out that alert in the trading community. If you guys want to come trade some of these trades with us, hit potentially some big home runs with us, link down below in the description of this video. But none of these are really going to affect the broader markets, and none of these are going to affect Tesla stock specifically, at least in my personal opinion. Salesforce has the potential to affect the broad markets. That's going to be on Wednesday. Same thing with Snowflake, especially if they have like really bad earnings, really good earnings, maybe, but earnings season is basically over for the broader markets. Now, if you guys have not followed me on X already, well, definitely go ahead and give the profile a follow. It's just Michael Tyler, pretty simple to find. I've been sharing a lot of these pictures and videos from the Tesla showrooms that literally have lines of people waiting to see the Cybertruck. Like literally lines of people. They've put up these line things, right? I don't even know what these things are called, to try to help with the flow of traffic into Tesla showrooms. Like, that's insane. We have not seen anything like that in a very, very long time. I think the halo effect is going to be insane. Take a look at this video. Cut that audio. Look at the lines here for the Cybertruck. It's just off the charts. Like, no other car is seeing lines like this. People are waiting in these lines for the Cybertruck. Now, I should also mention before we get into some of the technicals and where I think Tesla stock is actually going this week, that you do have a short position of $18.13 billion. Tesla is the most shorted stock on our markets by far. Tesla's float is about 3% sold short. So Tesla is about 2% of the entire stock market short interest. It's heavily shorted. There's a lot of people that bet against Tesla. Look at Jeffries. Look at all these other false reviews or articles we've seen for Tesla over the past, couple of months, the last years even. There's a lot of people that bet against Tesla. And right now is probably the worst time I can think of in a long time to bet against Tesla. But the other narrative is actually happening right now. People are saying this is the best time to bet against Tesla. In fact, that's completely the opposite. And I think after Thursday, a lot more people are going to understand that. The biggest single catalyst Thursday among other smaller catalysts is the pricing for the Cybertruck. Now, the higher the better, because think about it like this. Tesla has 2 million pre-orders. Tesla is going to sell every single Cybertruck they make very easily. Like there's going to be no inventory for the Cybertruck for probably years. Well, if they have a higher price variant of the Cybertruck, then they're just going to bring in more money. That's the bottom line to it. Maybe margins will be better affected, maybe not hurt as much, like Elon alluded to on the last earnings call. So the tri-motor is going to be the first one, presumably, that gets delivered to customers. Gary Black thinks it's going to be about $79,000. I think it's going to be about $90,000. Could be as high as $110,000. I'll tell you right now, the higher, the better. Wall Street's going to love it if the tri-motor is $110,000. They're going to say, whoa, Tesla thinks there's going to be good demand for this tri-motor. Tesla thinks they're going to be able to fulfill a lot of orders at $110,000. That's going to be really good for numbers. Or at the bare minimum, it's not going to hurt numbers. It's going to make that top line look a lot better here, at least for the next couple of quarters. Wall Street's very narrow-minded. They just look at the short term. So that would be seen as great news. Now, the lowest price variant is probably going to be around $60,000. And the mid-price variant is probably going to be about $79,000. Or around there, maybe 69,000, so somewhere along those lines. Kelly Blue Book thinks the lowest price variant of the Cybertruck is going to be about $50,000. I don't think so. I don't think it's going to be comparable to a Model Y. I think it's probably going to be $60,000, and then maybe $79,000, and then maybe $90,000 for the highest price model. Maybe $110,000, like I said. That's the biggest catalyst really for the Cybertruck. That's the thing analysts are going to be looking at that will change numbers. Now, if you guys have watched any of my videos lately, then you know that I think the Cybertruck, this delivery event, is the first big catalyst of many to come throughout 2024 that will send Tesla stock to new all-time highs. I think Tesla stock's going to new all-time highs in 2024. Anywhere from $400 to $600 or $700 per share. Now, that's because I think there's many different catalysts that will come out. If you guys are confused, well, check out some of the last videos that were put out. Some of the titles of those videos are, along the lines of Tesla will hit all-time highs, or the thumbnails. Check those videos out. We break those catalysts down in depth. One specific video, I believe it was 3 videos ago, there's 7 different catalysts that could happen in 2024. They could send Tesla stock to all-time highs. But I think right now, this is going to be a wake-up call to the shorts, to the bears, that Tesla's going to benefit in 2024. Tesla is going to do better than everyone thinks in 2024. And I think here in the near term, since Wall Street is forward-looking, that should add some optimism to Tesla's share price. That should cause some inflows to Tesla. Now, on a technical basis, you've seen a lot of demand under 230. So anytime you've hit 230 recently, you've seen a lot of buyers coming in. So I don't think you're falling under 230. Now, it's possible the Cybertruck delivery event flops and is terrible and the stock does fall. In that case, I would expect support around that 200-day moving average at $223.11 per share. What I think is Tesla stock's probably going to break above the 50-day moving average before Thursday. And then coming on Thursday and on Friday, Tesla stock could easily find its way about $260 per share. I think it's even possible that the anticipation of the Cybertruck delivery event could take Tesla stock to about $250. For Tesla to get to $250 before the Cybertruck delivery event, that would be a rally of about 6%. For Tesla to hit $260 by the end of this week, that would be about a 10% rally. I think that is very possible. On the high end, you could even hit $70 per share. Now, anything above really $260, you break above a long-term downtrending line of resistance that you have been in ever since all-time highs back in November of 2021. That's where you turn into no man's land. That's where you potentially get a big rally. Last time this happened was briefly two earnings ago back in July, and then you got rejected and you fell back down in a big way. If we wouldn't have got rejected here on this earnings, you would have broken out big time to the upside, well into the 300s. So I think that is ultimately coming. That's probably 2 weeks down the line where you could break out into the 300s, but I'm expecting quite the move higher to around 260 this week. That would be my expectation. Now, obviously, the economic data, whatever Fed Jerome Powell says on Friday, that's going to affect things, and that can be very important. So take that into consideration. But I think Tesla alone is going to do very well based on the Cybertruck delivery event. Now, good news is if you are a bull, take a look at the RSI. It's at 53.75. It's basically neutral. Like it's not bullish, nor is it bearish. So that does support and suggest that you should see a move higher from here. Now, why I say that is because anytime you hit 30 on the RSI, you tend to hit 70. So you tend to be really oversold, and then you tend to get really overbought. Sometimes it happens within the course of 2 weeks. Sometimes it takes 2 months, but it usually happens. You hit 30, then you hit 70. Hit 30, hit 70. Hit 30, almost hit 70. Now you hit 30. Are you going to hit 70 again? I would probably say so. You hit 30, you hit 70. Hit 30, you hit 70. Hit 30, you hit 70, right? Just back to back. It tends to follow the same trend. So if you were to hit 70 again, that I think would take at least a Tesla stock to hit around 260 or 270 by this week, or maybe even next week, to get the RSI even up to 70. So based on that, that's kind of in line with my price prediction. Now, again, if all things go sideways, I think your downside is around that 200-day moving average. If Wall Street really hates what Tesla has to say, then your downside could be about 205. And that would be the extent of what I would expect. But I'm not expecting that. I think there's a fundamental logical reason why you want to be bullish on Tesla stock right now. It's simple. Rates are going down in 2024. Tesla's probably going to raise prices. FSD is going into China by December or January of this year, probably Europe in the second half of 2024. Potential licensing deal of FSD. Expectations for Tesla are dramatically lower now than they have been over the past 12 months for 2024. Like, there's so many reasons to be buying Tesla right now. It just makes sense, right? Who else is going to benefit more than Tesla that is as high of quality as Tesla when rates go down? Nobody. I can't find a single stock. And if I do find a stock that is higher quality than Tesla, that will benefit more, that is growing at the same pace that Tesla is growing at, then I'll put my money in that stock. But I can't. So I continue to buy Tesla. Let me know what you guys think about this down below in the comment section. What is your price prediction for this week? Source that information down below. Again, if you guys want to come trade with us live in real time, I send out my alerts every time I make a trade. Link down below in the description of this video. We've hit some big trades over there recently. We're going to have another great week this week. I can already feel it. So pretty excited about the lineup, the setup for this week. Come join us. We'll welcome you with open arms. Thank you for watching. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.